Welcome to the WealthGenius podcast, brought to you by the Expand Wealth Real Estate Fund. Expand your wealth by investing in apartment buildings. Go to expandwealthfund.com to book your info session. The WealthGenius podcast, strategies for multifamily real estate investing, mindset, community, success. The WealthGenius podcast with your host, the godfather of real estate, Alfonso, who has expansive experience in business and massive success as a real estate investor. The WealthGenius podcast. Let's dive into today's episode.
All right, my friend, look at you.
Look at me.
Look at you looking at me, and now I'm looking at you.
Look at me.
We met. I'm trying to think of when we met.
Oh, I can give you a hint.
We met.
It was in Toronto.
Yeah.
It was at the, oh my God, I can't remember, Jack Astor's of some sort.
Okay, yes, we had like a little meetup thing. We had
meet up, and you and I got to spend a little bit of time before the event, and so I learned a lot about you, and you learned a little bit about me. So,
oh yeah, and I learned that you're the tax man. You know your way around taxes, and in this country, that's all that's on our mind.
Well, it's so funny
consistently.
You're the one who's teaching everybody to make money, and I slide in there and try to help people
how to
save their money. So,
well, what I learned quickly in life, and it was really quick. If you don't have your shit taken care of, the government will take whatever they can.
Well,
right?
it's I tell you, Alfonso, I'm in my 40th year of being a tax guy, 40th, and I'm only like 50. But anyway, no, seriously, I've never seen it as bad as the last couple of years.
Yeah,
they're coming after us. They'll take anything they can from us.
Yeah,
and so we have to put up our defense mechanisms.
Yeah,
you got to pay taxes.
Yeah,
but you don't have to pay 50% of your income.
Yeah.
Right, so my shtick is about saving taxes, and to be honest, I'm a bit critical of a lot of my colleagues because we find that a lot of the CPAs I call them compliance accountants. They take your stuff, they file your tax returns. Here's your bill. See you next year. What have they done to save you taxes?
Or
very little.
They're very reactive. I find a lot of the accountants are out there. They tell you the thing after the fact. Oh, you should have done this.
Well, but our training, I spent 10 years at Deloitte in their tax department, so I've got a good background on this stuff. The training is to be risk adverse. No, you can't do that. No, you can't deduct that. No, you can't. No. And then you get successful, you start paying a high percentage of taxes, and you go, this is enough. You have to, no, you don't want to pay this much tax,
So what are some of the things that we need to be doing to not pay so much tax?
Well, I
always tell people this: you lose two ways. Anybody can make money. I think making money is the easiest thing. I mean, someone could sell oranges, or someone can be an NHL player, or someone else could be a real estate investor, or whatever. There's, so many ways to make money, but most people lose their money through incorrect tax strategies. Yep. Or lawsuits.
Yeah,
right.
And, you need to be careful where you get your tax advice too.
Yeah,
because I've seen that before. Well, my neighbor.
Yeah. He's doing this.
No. So I also think it's important, and that's kind of what I bring to the the WealthGenius community, is I try to get them to have a basic understanding. You're a real estate investor.
Yeah.
Okay, you own a duplex, triplex, apartment building, multi-unit. Okay, you've got net rent income. Okay, so where is that going? What tax return? Is that going on your tax return at a 50% tax bracket? No. Can that go to a corporation at 12%? Yes. Basic. You don't have to be a tax expert. So just some basic understanding of tax, I think, is what the real estate investors really need to know. So they're in a position to challenge, I've got a lot of clients that I'll take from, I'll review what happened last year. I'll just give you an example. Client makes $150,000 at a job.
Yeah.
And then they got an apartment building, and we see net rent income going on top of $150,000, sending half of it away. Well, there's no tax planning there. You could divert that to a corporation and pay 12%. So there's a lot of people missing. And when I see these situations, and I see them far too often, I ask, like, why didn't your accountant do this and that? And I don't know. I just bring my stuff to the accountant, and they give me the bill, and I pay my taxes. So I blame a lot, too, to the CPA community for not really doing more for their clients to save the tax and educate them. So you're an educator. I like to think I'm an educator in the tax world, to just give people the basics so you can challenge, the person that had the $150,000 job and had the net rent income put on top of that income on the personal return should have been able to say to that account, why did you do that?
Yeah.
Why didn't you do something more creative? So anyway, that's...
I find that one of the biggest issue with people is that they're so afraid of this subject because we're trained that way. We're trained not to ask questions, or, you kind of feel like an idiot sometimes, but we kind of leave it to the end. So now it's an emergency situation that the accountant has to deal with. I'm guilty of this. Like my accountant has chased me, and we, a lot of the times, and I've said that to Helene, I'm like, this guy, we got to change the accountants or whatever. But like one day I said that to Helene. I'm like, look, is it possible we're not like cooperating with the accountant? Like we don't give the information that the accountant needs and at the time that they need it or whatever. And I feel there's like a mental block when it comes to paper with a lot of people, where it's like they just stack it up and they put things in a shoebox, and you kind of want to forget about it until the time comes. It's like, oh my God, where's this receipt and where's that receipt?
Well, yeah, listen, you made a good point. There's fear of the government. So like, oh,
bastards.
We bastards, is right. We got to pay our taxes. We can't do anything creative. Even something simple like, okay, we're going down south for holiday. Well, we're real estate investors, so why don't we take a day or two and look at some real estate like we would all do? Well, that becomes partially a business trip.
Yeah.
Right. So why not deduct part of that? But also to your point, one of the problems in the tax world is we do most of our work in a very short period of time. So the level of service is hard for us to provide in that short period of time when everybody's given us their shoe boxes and all their information to do the tax return. So I always say, the tax planning is a 12-month of the year thing.
Yeah.
And in our world, we're really busy from January to basically June 30th is our last filing deadline. So in my world, it's kind of really busy the first 6 months, and the last 6 months is more business development, a little more time for clients. So that's the time that we want to spend with clients, get them ready for the next year, planning, strategizing. Should you have a corporation? Should you not? Should you have a holding company? Should we restructure your affairs? So the last 6 months is a very important time, not only for me as an accountant, but my clients, because that's the time we can give them service. Hard to give them the proper service in the first 6 months because it's just insanity. And that's a problem too with the whole tax filing system. Why do we have a February 28th deadline or an April 30th deadline or a June 5th? Why don't you file by your birth date, 6 months after your birth date? It's so simple. I keep telling the government this, but they don't listen to me.
Well, you're such a unique person in this space, because you're out there, you're speaking, you're networking. It's not, I don't see many accountants like out there, like, speaking on stages and helping people. Most of the accountants that I know are kind of reserved and, like.
Well, I attribute that to one person. You.
Oh, me.
Before I joined WealthGenius, I was just.
Oh, really? So I was.
You inspired me.
I thought you're like this master networker. You know what I mean?
No. Listen, I've done. I've done a lot of speaking in my day, but it really a lot came together when I joined your organization.
Okay.
It was a good. It was a good move on my part and a brilliant move on your part, because now I get to save all your numbers tax.
I love it. And so how did you get into this business? Like, where did it all start? Like,
oh my God.
Were you like a kid with a calculator? You know what I mean?
was a kid with a drum kit.
Oh, really? So
yeah.
Okay, so you're a performer.
I'm a professional drummer.
Okay, that's what I meant. I'm like, you're not the typical
No, so
accountant.
I have the creative side of my brain which needs to be fulfilled, and you know, and on the other side of the brain is more linear, black and white. So, no, I started out. I wanted to be a musician, and my parents kicked me out of the house and get out of here, go, you know. And so it took me a year or two or three to kind of, okay, this musician route isn't really going to take me where I want to go. What am I good at? I looked at my high school. I'm pretty good at accounting and math. All right, let's go. And I remember thinking back then, okay, you know, accountant, you know, is that my passion? No, but it seemed like a good career choice. It seemed like something that I, you know, would be good for me when I'm 50 and 60. So all the reasons I got into this business have, you know, been fulfilled as far as where I am at in my life now. But I did, when I joined Deloitte too, so that was my first job, I really became a sponge on the Income Tax Act. For some reason, okay, I got to know everything about this thing, and I got to save the world from taxes. That was kind of my, you know, so that's what happened. So that's what I did. So I followed a career in tax, and then I started out when I left Deloitte, set up my own public accounting practice. I started investing in real estate, very small, just single family, you know, and duplex. But you know what the biggest mistake I made, Fonzo, and you will appreciate this. I kept selling these things once they made they grew. Oh, I made
Cash out.
$20,000 on this property I bought last year. Sell it out and then take the money and buy another one. And I'm like, and then sell that again. And so that was a mistake. I should have just kept them all. You know,
and then you have to pay like those capital gains
and then there was another thing that really you know, it inspired me in the wrong way. Was I was brought up in a family that don't borrow money, save, you know, buy a house when you have all the money in the bank. We're never gonna have all the money in the bank.
Yeah.
And this is when I was younger, and my circle, the people around me, they started buying houses with mortgages, and I'm like, my parents, oh no, you don't want a mortgage. Oh my God, no, you don't. And so that whole mindset, I had to like, okay, Mom, Dad, I love you, but I could get out of my financial life here. I got to start leveraging and borrowing money to invest. And, you know, once you see the magic of that, that's a beautiful thing. Why use your own money? Use other people's money. Right? So that was, I should have met you when I was 25 or 30. So I blame you for not coming into my life at 25 or 30. But anyway, it's the whole life is a learning experience.
And so you're like, I mean, you got the accounting side, but you're also an investor yourself.
Oh, big time. I've here we are, you know, Alberta, the Expand I own 2 apartment buildings, 29 unit and 21 unit in Alberta. Yeah. And I never would have done that without the connections through your organization and everything else. So that's worked out great. So
and when you help, you know, what I love, I always tell people, you know, make sure that anybody that you're dealing with on a professional level should have some context of what it means to be an investor. I mean, this is a completely different walk, you know, and the average accountant is not going to be able to support someone someone that's an investor.
No, that is so true, and I'm surprised by that. But so many accountants that don't have any really real estate experience are not providing the proper service to their clients, structuring holding companies, management companies, active income, passive income. So, yes, I do fill this little niche where, I'm a CPA, I know the Tax Act, and I'm a real estate investor. Sure, I'm not the only one out there, but there's too many accountants that don't have that experience and, in my opinion, are really underservicing their clients in that field. So,
what are some of, and again, I don't want to get political here. It's not a political show, but we do have we don't have a new government, the same old government with a different face on it. But like, what are some of the things that you are excited about, and what are the things that you're not so excited about?
This is not a political show. I'll be careful what
this
I
is
say.
Well, you know, just from my have like just kind of like a view, because it is what it is. We're here. We got this government. And so there's good and bad in everything.
You've hit the nail on the head. It is what it is. We can't change the world. We go out, we cast a vote.
Yeah.
I mean, how democratic is that?
Yeah.
I guess they call it a democracy, but does our vote? It is what it is. You know, some parties favor a little more tax favored policies. Others are not. You know, it's more of a mindset. It's a fear. I don't want to get political either, but we just had a recent federal election, and whether your team won or your team didn't win, if they didn't win, there's fear.
Yeah.
And, you of all people, the mindset, get past that fear.
Yeah.
Go. You got to be, you have to act.
Yeah. Well, the mindset that I have is very similar to any professional athlete. In whatever sport you're working in, they're going to change the rules at some point in time. And so professional players come back and play the same game within the new rules. They're not going to stop playing the game because they changed the rules or there's a new coach or there's a new leader.
Yeah, another way I look at it is, oh my God, all these tariffs now, inflation. Okay, well, if we're real estate investors, what is inflation going to do to the rent prices? They're going to go up.
Yeah.
Of course, we watch the news where fear and everything else, and you sit back, oh, well, if inflation goes up, my rent revenue comes up, and maybe that's a good thing from, just like my own personal cash flow point of view. There's good in anything. I mean, listen, they try their best, whether we agree with their policies or not. Yeah. It is what it is. You keep moving on. You find the next deal. You try to put the deal together.
Is there anything exciting about any tax from the tax world perspective that it's either, for example, I'll give you an example, that capital gains going up to 66.6%. Yeah. I mean, it was like, that's kind of harsh, and then they've decided to delay it, and then now they're kind of not sure.
Well, I mean, so that was a bad policy, because that one kind of pushed a lot of people over the edge about, okay, do I stay or do I go? And I'll tell you, the last 2 years of my tax life, I have had more consultations with people, not so much leaving Canada, but planting a seed. Like, okay, how does this work? What do I have to know in case I do want to do that? So that was a really bad policy. That pushed a lot of people. It was good for them to go, hey, you know what, let's just not do anything till. So now it's only deferred till January 1, 2026. It hasn't been canceled yet. Yeah. So we're still waiting, walking on eggshells here. What is going to happen? That's a bad one. Yeah. But it is what it is. If we gotta, there's ways around those capital gains. That's all the more need for strategizing.
And this is something that I only learned through selling a property, right? So I was under the mindset that it's you pay 50% capital gains, and that's it. That's what it is, Yeah. And in the corporation, because all our properties are in corporations, they take that 50%. But it was a surprise to me, and I know a lot of people may not know this. They only hold. They take it to hold because from a corporate tax perspective, whether it's 12 or 20%, whatever, that depending on how that money goes out to you. So they're only holding it for a certain amount of time, and then it comes out to you on a dividend. That was like in whatever tax bracket you're at that time. That will be that's going to be how much you're going to pay in taxes. Yeah. And I didn't know this. I think most people just think it's 50%.
Well, it's interesting you mention that. Okay, because it's not that you pay 50% tax, but you pay
you pay 50. 50 of the 50 is taxable.
Correct. So it's 25%. Right. Hold on. So you make $100 profit.
Yeah.
Half of it is tax free. Half of it you pay 50%. Yeah. So on that $100, you're paying 25%. Yeah. That's if it's a capital gain. Mm-hmm. If it's a business, you're paying 12%.
Yeah.
Well, you of all people have all these members that are running real estate businesses.
Yeah.
So why are you even calling it a capital gain? Call it normal business income and pay your 12%.
Yeah.
Quit paying capital gains.
So the thing that I was alluding to is that I didn't know you get that money. Like that money it's being held, but it's there for you, and then you could pull it back out as a dividend.
Or there's whole, when you pull money out of a corp, we as accountants get to characterize what it is you're pulling out. So you pull money out, is it a management fee, a salary, a wage, a bonus, a dividend, a tax-free allowance, a shareholder's account? There's all kinds of things we can characterize that income as, and it really depends what we want it to be, where we want it to go. there's only 3 taxable entities: a person, a corporation, and a trust.
Yeah.
So that income has to go somewhere. So with the corporation, we get to characterize it and figure out the best tactic to get that in. I mean, ultimately, we want the money out of the corp in our pockets and spend it. Ultimately, because from an estate planning point of view, you keep all your money in the corporation. Well, that corporation's going to go through your estate to your beneficiaries, and there's another tax problem. But anyway.
So actually the show's picking up steam here, and we got a lot of people listening. Some people brand new to real estate. They're just like real estate, and then they just kind of casually stumble onto our show. And so what would be some of the things that you can advise, or maybe not advise, but just, how should someone prepare their taxes, and what are the things that they should be doing first?
Well, as far as preparing your taxes, let me just back up a bit, because you said a lot of new people to real estate. Money needs a home. You have money, you're going to invest it. Now, traditionally, you go to the bank for advice, they're going to put you into mutual funds. Well, people are becoming really sick and tired of mutual funds, high management fees. They're looking for alternative investment sources. And real estate, obviously, has elevated and become a very viable source for many people. So certainly they look at real estate, and, they need to get educated. They need to have training. They need to belong to a network that's humongous. So now they're into it. If they're new to real estate, there's a lot of new moving parts going on. So when you take all those moving parts, and if you just go to your accountant in January and February and say, here's all my stuff, when we're the busiest, they're not getting the proper service. So I can't emphasize enough that this whole tax game is 12 months of the year.
So the busy season, you would say, is between March to...
We kind of train our clients, because what happens is if we don't train our clients, we get really busy in February to June. We want to train our clients in January, get their stuff in January, because we are also then ahead of the deadline. So if we see stuff, we go, hey, we should be doing something. We have time before our filing deadline. But the point I'm really trying to make, especially to your viewers, is don't wait till tax time. We have time between the last 6 months of the year. We have time. We have availability. Come on in and see us. We don't bite. Most of the consultations are free. We're happy to make sure these clients are set on the right path. So when tax season does come, this is what we need. This is, we've already structured them. Yeah. We've already had some discussions with them. I'm like you. I'm an educator. I want to teach these people the basics. I don't need to make them accountants, but you just need some basic understanding. Should your property be in a company? Should be held personally? Where does the income flow to? That's not high-end tax planning. That's just common sense to a certain degree. So we want to share that information, and then these people are in a better position to discuss that with their professionals.
Yeah.
So that's what I'm about. So.
Do you still play the drums?
I do. I do. I miss my drumming days. Yeah. I don't know if I should. I don't know if I should say.
Did you get you on stage?
Well, Alfonso, I spent 10 years playing in a KISS tribute band.
What?
Traveling all over the place.
Did you wear the makeup?
100%.
Oh my.
And in fact, we. This is a funny story. Paul Stanley, the lead guy's KISS, he introduced a new guitar, and he did it through all the Walmarts. I don't know why the Walmarts, but on release day, every Walmart in Canada got his guitar, and every Walmart was told to find some KISS, impersonator, and every Walmart had to send the pictures to Gene and Paul, and they were going to pick the best dressed KISS tribute band across Canada.
And you won?
Guess who won?
Oh my God.
So that was cool. That was really cool.
I remember Gene Simmons used to have a show.
Yeah.
You remember that show?
Yeah. Family Jewels.
Yeah, and then one of my favorite episodes, and I didn't spend too much watching the show, but I saw this one episode. It was so funny, because he was I don't know, somewhere he was shopping or something, and he sees a KISS T-shirt for $2. in the rack. It's on sale.
And he was mad.
Yeah, he was so upset.
I saw that.
Yeah,
one.
and then he's like,
it's
"I
worth
like
more than $2.
Yeah, he went to the front. And he's like, "I want to pay $200 for this T-shirt." They're like, "No, but it's $2." They're like, "No, but I want to pay $200."
It's worth more than $2. That's funny. That's funny.
Good show. Good. So you were.
We did a lot of stuff.
Wow.
Like Ontario Place, 15,000 people. I'm up there singing Beth. I mean.
Wow.
It was,
so you were a
stuff.
singer too.
Wow. Oh my God. How much time do we have? So with Kiss, the drummer, I'm the drummer. Guy, So once I have to come out and sing Beth.
Wow.
And for drummers, we're not, there's no big deal, but we're hiding behind our drum kit. Nobody can see us. But once you tell us to go out in front of the stage, in front of all these people and sing, and I'm all dressed up in that was challenging, but it was fun. It was great. It was.
Well, you know what? When I see you on stage, and it looks like you're having a lot of fun, and I got the impression, I'm like, I don't know. It doesn't seem like an accountant.
How many times I've been told that.
And so now that on the show, it makes a lot of sense. There's a creative side to you, and you know what? You want some level of creativity with people that are managing your money.
Well, the other thing that is really important to know is there's an integration of your tax life and your investment/real estate life. And when somebody goes to an accountant over there and goes to an investment person over there, or they do their own real estate investing, there's no integration. And there's so much what I call financial leakage. So it's very important that the person who's doing your tax return is also working with you on the investment side so we can strategize. And that is a big problem that doesn't happen. Because a lot of people are tied at the banks or their financial advisors. These people aren't accountants. They don't know anything.
Yeah.
They know the basics of tax, but they don't. As soon as you mention a holding company or a trust, they're lost. So that's not the person that you should be having your investments with when you're also trying to strategize from a tax point of view, because I can tell you for sure the accountant doesn't talk to the tax person, the investment person, and the investment person doesn't talk to the accountant enough. They might have one conversation at tax time for 5 minutes, but
it's like the right hand doesn't talk to the left hand.
Yeah, so that's an important integration, and that's where we, I guess have a niche in the market where I'm a real estate investor and I'm also a tax guy. So when you combine those two services, people listen.
I love it. And so a lot of your information is going to be in the show notes. We're going to put how they can get a hold of you and all of that. Yeah. And if you're watching this, and I don't know if you've ever revealed that publicly about KISS, but maybe they can hire you as well.
No, we're done. That's done. We're done. We're finished. No, that's actually a secret. You might have to edit that.
No, it's part of the big chunk of the show.
It was all fun and games until we took our stuff off at the end of the night, and they're like, "Who are you?" I'm the guy who signed your autograph. No, get out of here. They want nothing to do with us when we took the costumes off.
So before we wrap things up, my friend, I always want to get some level of inspiration from our guests, and kind of what inspires you. What's a quote that you live by, or what's a mantra that you live by?
Oh boy. Well, listen, what inspires me? Listen, I'm gonna give you some credit here on this closing note, because you have inspired me. Okay, what you do for not only people but for me, because here's what happened in my world. So when I worked at Deloitte Touche, there was 100 accountants. So I'm hanging with accountants all day long.
That must be a party.
I don't know if that's good or bad, but certainly from a learning point of view, it was good. And then when you leave, you set up your own practice, you miss that group environment. And, then you join an organization like this where a lot of the people are solopreneurs. So, they work on their own, they work in a little team, but now you've created this group and this family. So that's certainly what was missing in my life after, having done what I did. So this was, this inspires me. Man, to live by. Pay less taxes. I don't know.
Yeah, that's one that I can get behind. Pay less taxes. Hey, Gerry, I love this. I learned a lot about you in this interview. Thank you for being an important contributor to our community. And you know what? I'm sure that many people will be supported by your services. Thank you so much. And that's the show. Look, quick and easy.
Thank you, Alfonso, for everything you do and your team, everybody.
Alfonso loves you, and we'll see you at the top. Woo!
Gerry loves you too.